G'day traders, Mindset Reset, Free Cash Thursday. Today we're talking about trading in the zone. We have had an absolutely textbook week for best trade setups. Today was probably ripped a page right out of the playbook. We had day two, Thursday, Wednesday, Thursday, Friday, day two in a Monday to Friday template, but we had first green day on Euro Oz, Pound Oz. We had first red day on gold. We had indexes all breaking down after yesterday's breakout pullback. NASDAQ took out breakout, opening range breakout, took out the high of the week, and then reversed into today's session and collapsed. DJ30 breaking down, S&P breaking down, third hour news. Gold today. First bar trade. Go back to last Thursday. I've talked about this before. The difference between a first bounce trade is a first bounce is an explosive move coming out of a longer time frame setup. The pullback and the coil for the continuation. First bar, you have to understand, especially on a day two, 3 levels of rise. First bar traps the entire upper third of the 3 levels of rise on a day two. And the target is, of course, the low of the day, the low of the week. So several traders have messaged me and said, I still don't understand how you could go in on that trade. Remember, we have 3 levels of rise and trap volume up top, and it's a day two after first red day. We want to short the market at the high of the day, but we got to wait for the news. First bar breaks down. There's no wicks are on either side. So remember, that first minute tells you 90% of what you need to know. It will either explode out of a larger 15-minute 3-day consolidation or something, low of week, high of day, low of week, whatever that may be. First bar, so you can get a candle that will explode for first bounce opportunity. And when I say explosion, it clears the range. It breaks out of the range. Then the other option is a bar that wicks both sides in that first minute. Okay, that negates everything else. First bar, though, is the 1-minute bar that completely engulfs the entire upper structure. And that allows you to position yourself in a momentum news catalyst opportunity with a thesis that is now going down to the low of the week. But not only that, a measured move. High of session, low of day for that full range expansion. And so if you wait for the first bounce, you'll notice that it doesn't come until down low. So again, understanding that if you wait for 5 minutes for a 5-minute bar entry, that 5-minute bar will be at the low of the range. And then traders will say, I can't short it down there. My stop would be too big. Now you'll notice my max stop on that, because it's a momentum trade, is 20 pips. And if it breaks down in the next minute, I will add to that, because it's already confirming my thesis that market is not going to come back. And so now once it breaks out, the next major opportunity is going to be based on time and behavior of price. So we do a full range expansion. 1 hour puts in a low of the session for an explosive reversal. 3 pushes down, 25 pip explosive move into lower level shorts right at the beginning of the second hour. That breaks down into that explosive move and gives us a micro W pattern for a 50 pip reversal into lower level shorts if you chase that first bounce down at the bottom of the range. So that first bounce becomes the low-hanging fruit on the reversal trade. So a couple traders said, oh, that's just a session scalp. It's about 90-10. When you say just a session scalp, remember, they are sizable. You can size into those. It doesn't mean you're going to go full size like you would on first red day or high of week to low of week on a Friday, 3-day, day 1, day 2, day 3 session setup for a 5-star collapse or vertical move on a trend trade. But it's still 90-10 opportunity. I'm willing to put some size on that. And that size is relative to what you're willing to lose on that setup. But remember, as it's confirming, I'll add into that. But there's a limited time. You have to be prepared before you go to the screen. So coming back to Pound Aussie, Euro Oz, Pound Oz was already in a parabolic. Pound was a stronger pattern. Now, I haven't gone back and looked to see. I think they roughly moved about the same. The Euro also gave a first green day low of session continuation trade heading into the news, and then that market continued. The pound went parabolic in London, and that parabolic move reversed in the US window. Major red news. Day 1, day 2, day 3. Tuesday was high of the week on the pound. Day 1, day 2, Day 3 reversed and went parabolic through the high of the week. So coming back to understanding that thesis, parabolic reversal trades, parabolic trend trades. And all that was today is a Day 2 trend continuation trade after first red day on gold. Lots of movement. So coming to the really important understanding of being prepared, being in the zone, knowing exactly what you're looking for. Look at last Thursday. It's the exact same trade on gold. I mean, it's the exact same trade. News is there to manipulate and trap traders or scare traders out of getting into the market. Now, remember the 3 types of news candles that will happen on major red news. An explosive breakout candle for first bounce. Now that has to align with a larger time frame setup. Or it wicks both sides. We'll often see that, and that can be a break in structure in some cases as well for a 2nd or 3rd hour trade. So that can be something down low or up high. That wick is a break in structure, and then we see the market reverse or continue in line with that existing trend or reversal. So, but today, first bar is just where it's a momentum trade, and they're not going to come back. We saw last Thursday, it did come back low of the week, peak formation reversal that gave us our first green day heading into Friday. And then that was a Thursday, Friday, Monday opportunity on gold, blowing off on Monday in the direction of the trend. So getting into the zone, knowing ahead of time, what am I willing to risk on this opportunity if indeed it does present? Well, that's a textbook trade on gold. That was just, almost funny because it just rinse and repeat. But getting yourself prepared, as I've been just putting these charts up, like it literally takes me a couple of minutes each day to walk through the charts. Japanese session, Asian session, Euro Yen, a beautiful first red day short Wednesday in the US session. So London put the high of day in, first red day on Tuesday. US session was a sell high in the US session for the short that consolidated into the close, still in out of balance. And that blew off this in Thursday morning for me, Wednesday evening for me, Thursday morning for Asia, for an easy 50 pip parabolic move. So again, front side, back side, just having the patience and looking for the easy money, knowing if we're on the front side at the beginning of the week, we could be in the session scalp unless we had a fantastic trade on gold on Monday. But getting in the zone, I basically have the major pairs, the 3 indexes, gold and oil, then my Asian session crosses. It's pretty straightforward. And when a major pair doesn't seem to be giving a template, then I'll look to the crosses to see if one of them is demonstrating a cleaner best trade setup in terms of the template itself, and then knowing when I want to be looking for something possibly on the backside towards the end of the week. We have non-farm payrolls tomorrow. I'm sure we're going to have some free cash laying on the ground somewhere, but keep it simple, traders. This is just like textbook. This week was last week was fantastic. This week has almost been too simple. So stay focused, and it's just a matter of walking through the process, knowing what your best candidates are, narrowing it down to 2 or 3, watching how price behaves, allowing the market to set up if there's major red news, having a thesis for a larger time frame setup, and then what you're going to risk on that trade. How much can you make? How much can you lose? So one trader asked what the blue line was. The blue line is a 50% level within that box, which basically keeps my stop around 20 pips on gold. But you'll also notice the first bar, if you draw a line at the close of the first minute, it traps the entire upper third of, actually more, the upper half of the higher level longs, and they are not going to let them out of those trades. They go straight down to the low of the week, and they keep going. So keep it simple, traders. Best trade setups, rinse and repeat. Scale them up in size. You only need 1 or 2 of those parabolics, and I'm pretty sure there's been at least 1 5-star opportunity every single day this week in each one of the sessions. So keep getting better, 1% better every single day. Get out, get to the gym. Just had a great workout. It's boiling hot here today, and may the markets go with you. Have a great day.